After months of speculation, GameStop announced it would be buying BTC, and its stock price crashed. Yeah, in a move that should have been bullish AF, investors were racing to dump GME stock, causing its price to plummet. So, what will happen to the other publicly traded companies that have been adding BTC to their balance sheets, and what could this all mean for the crypto market? Today, we find out. My name is Guy. Stay tuned. When GameStop announced its Bitcoin Treasury plan late last month, its GME stock jumped 12% on the news. But these gains were wiped out and then some the very next day when GME crashed by 23%. So then, what gives? Well, GameStop announced it would sell $1.3 billion of convertible bonds to fund its BTC purchases. For those unfamiliar, convertible bonds are essentially receipts that represent a loan to the company. Usually, there's a nice yield for the investor, but in this case, it was 0%. Not only did this suck, but investors were worried about GameStop's income stability. Adding BTC's volatility into the mix impacts GameStop's reserves, potentially eating into profits if it needs to take money from elsewhere to fund expenses. This spooked investors into selling. However, GameStop is thinking long-term and is one of many companies aiming to replicate the success of Strategy, formerly MicroStrategy. So this begs the question of why so many publicly traded companies are emulating Strategy's strategy. Oh, but before we go any further, did you know that 40% of you watching this aren't subscribed to the channel? So go ahead and hit those like and subscribe buttons and ping that notification bell to make sure you're getting your daily dose of crypto alpha. And if you want to maximize your crypto gains, then you have to check out our exclusive exchange discounts on the Coin Bureau deals page. You'll find sign-up bonuses of up to $100,000, trading fee discounts of up to 50%, and up to 75% cashbacks on deposit. These deals won't be around forever, so take advantage while you still can by using the link below. Now, to understand why GameStop and other publicly traded companies are buying BTC, we need to look at the OG, MicroStrategy, now known simply as Strategy. Now, Strategy has been offering business intelligence solutions since 1989, helping businesses to maximize their productivity and profits. And for a long time, this was all that they were known for. However, this changed in 2020 when then CEO Michael Saylor, who was worried about the company's treasury devaluing due to inflation, made the unprecedented move of spending $250 million to buy more than 21,000 BTC. This was despite MicroStrategy having nothing to do with crypto at the time. Saylor has since become Bitcoin's biggest advocate, seeing it as the world's most superior asset. He even stepped down as MicroStrategy's CEO to focus more of his time on Bitcoin. And thanks to Saylor's unwavering belief in Bitcoin, Strategy has accumulated an ungodly amount of BTC. Saylor has no intention of slowing down anytime soon either. He once said he'd buy BTC at $1 million per coin. That's right, buy. MicroStrategy's recent rebranding to Strategy now brings its Bitcoin treasury to the forefront of its business model. Strategy CEO Phong Le has acknowledged the company's main value proposition has shifted towards Bitcoin and declared Strategy as the world's first Bitcoin treasury company, or BTC. See what he did there? And the company also revealed its uber-bullish 21-21 plan last October. Essentially, this involves raising $42 billion between 2025 and 2027, split evenly between $21 billion in equity and $21 billion in fixed-rate securities. What's crazy is that Le says that Strategy's $21 billion equity raise is the biggest ATM, or at-the-market program, in the history of capital markets. ATM equity programs allow companies to raise money by selling new shares on the open market. And they differ from traditional offerings because they're more flexible, since they're not tied down to a schedule. Strategy also announced a new KPI called the BTC yield, which basically measures how the amount of BTC per share changes from one period to the next. Now, Strategy has raked in thousands of BTC on a near weekly basis. In 2025 alone thus far, it's bought an impressive 81,785 BTC as of the time of shooting this video. It's probably even more by the time you're watching. Saylor & Co. just cannot get enough. So this brings Strategy's current total to 528,125 BTC, which is around 2.5% of BTC's total supply. Wow. And the company's early position in Bitcoin and its subsequent hoarding of BTC means that the price of its MSTR stock is basically a leveraged play on Bitcoin. Its price is hypersensitive to BTC's price action. And this is why MSTR has often outperformed BTC in percentage terms. Now, all of this has helped Strategy to be incredibly successful, to the point that MSTR has been added to the Nasdaq 100. This effectively means that mainstream investors get indirect exposure to Bitcoin. Clearly then, transitioning from a business intelligence firm to a Bitcoin Treasury company has been a winning strategy. And as such, other companies are exploring ways to build Bitcoin treasuries of their own. So, let's now take a look at 5 companies following in Strategy's footsteps. So, the first company that's been adding Bitcoin to its reserves in 2025 is Mara Holdings, which was previously known as Marathon Digital Holdings. For anyone unaware, Mara is the largest Bitcoin mining company in the world. As well as mining, Mara also provides solutions to help optimize data centers, like innovative liquid immersion cooling systems and specialized firmware for miners. Mara has been adding Bitcoin to its corporate treasury using an approach similar to Strategy's. Mara has used stock offerings and convertible bonds to increase its BTC holdings. And a recent prospectus from the company confirms that funds will be used for general corporate needs and emphasized a clear focus on Bitcoin adoption. Now, despite being a Bitcoin mining business, which naturally has high overheads when it comes to things like hardware and energy consumption, Mara hasn't made too many sales of BTC over the years. Although, of course, there have been a few. You've got to keep the lights on somehow, after all. Instead, though, Mara prefers holding and acquiring Bitcoin over selling mined coins for operational costs. In July 2024, Mara adopted a full HODL strategy, keeping 100% of mined BTC in its reserves, and has also accumulated more through the open market. In March this year, Mara announced a $2 billion stock offering with the intention to, yep, you guessed it, increase its BTC reserves. Using an ATM structure allows Mara to sell shares whenever they see fit. And this isn't the first time that Mara has raised funds in this way. It offered a $1.5 billion ATM program last year and a $1 billion convertible note sale in November, both of which significantly boosted its reserves. According to Bitcoin Treasuries, the company has been adding to its BTC stash almost every month, with multiple additions in most months. Since the start of the year, Mara has accumulated 1,980 BTC. The most recent addition was on the 3rd of April, when it added 1,226 BTC to its holdings. And this brings Mara's total stash to 47,600 BTC at the time of shooting. But how has Mara's stock performed? Well, when the company first accumulated BTC in December 2020, its stock jumped 30%. In 2025, Mara has added BTC to its reserves every month so far. And when Mara accumulated in January, its stock price rallied by 18% and then rallied 6% when it accumulated in February. Strangely though, Mara's stock price dipped by a massive 20% when it accumulated in March. And at the time of shooting, its stock has remained relatively unaffected by its accumulation in April. This is presumably down to broader market conditions rather than any negativity around Mara itself, though. Okay, the second company adding Bitcoin to its balance sheet in 2025 is Riot Platforms, which was previously known as Riot Blockchain Inc. Riot is the world's second largest Bitcoin miner behind Mara and the third largest publicly traded holder of BTC. Riot's vision is to be the world's leading Bitcoin-driven infrastructure platform. Like Mara, it also offers services outside of its mining operations, and these include data center housing and engineering services. The company also manufactures specialized infrastructure equipment for institutional-scale miners. Now, for Riot to remain one of the world's leading Bitcoin companies, simply mining BTC isn't enough. That's why Riot has also been purchasing BTC to further increase its balance sheet. In December 2024, Riot bought $510 million worth of BTC. This came after reports that an activist investor, Starboard Value, had bought a significant stake in the company and was urging Riot to repurpose some of its Bitcoin mining capacity to service AI models. If you watched our video on Bitcoin miners, you'll know that some miners have been debating the move into AI data processing since it's potentially more lucrative. The catch is that it's also much riskier, and ASICs, the machines used to mine Bitcoin, can't be used for AI since there's different hardware requirements. And you can learn more about the Bitcoin mining industry by checking out that video right over here. Now, Riot is aware that even as a Bitcoin miner, purchasing additional BTC makes them more appealing to investors. As such, the company recently announced plans to raise $500 million by offering convertible senior notes to institutional investors in order to buy more. This is great news for investors, but it's also great for Riot. That's because Riot believes that hodling Bitcoin supports the company's longevity. That's because Riot sees Bitcoin as the ultimate store of value and is banking on Bitcoin's long-term benefits. However, we should point out that, historically, Riot has made sales of mined BTC to cover operational costs. Although these sales are usually pretty minimal and the company's additions far outweigh its sales. Riot has accumulated every month since the start of 2025, adding 1,263 BTC to its stash. This brings its total to 18,692 BTC at the time of shooting. Now, since this accumulation is expected, Riot's stock price has been largely unaffected. However, when the company announced in December that it had purchased an extra 5,117 BTC for around $525 million, its stock rallied 17% on the news. Okay, the third company adding Bitcoin to its balance sheet is Metaplanet, a Bitcoin Treasury company located in Japan. According to Metaplanet's website, it's Japan's first and only publicly listed Bitcoin Treasury company. And not only does Metaplanet strategically acquire BTC as its core treasury asset, but it also manages a hotel in Tokyo, which is being rebranded as the Bitcoin Hotel. And they also hold the exclusive license for Bitcoin Magazine in Japan. Metaplanet made waves in 2024, with investors dubbing it the MicroStrategy of Asia. And to be fair, this is pretty accurate. Not only does Metaplanet share a similar business model, but it's even replicated some of Strategy's business practices. For example, Metaplanet measures its performance using the BTC Yield KPI, which you'll recall was pioneered by Strategy's CEO, Phong Lei. To refresh your memory, the BTC Yield measures the monthly percentage change in BTC on the company's balance sheet. Anyway, what's crazy is that Metaplanet was originally a real estate company focusing on hotels with roughly $34 million in assets. However, the company faced an existential crisis during the pandemic. Metaplanet's CEO, Sumin Gerevich, said, quote, "Japan's decision to close its borders caused our hotel business revenue to drop to almost zero overnight." So, seeing hotels as a risky business, Gerevich decided to switch to digital gold for safety. In his words, quote, "By pivoting to Bitcoin, we transitioned from a business model vulnerable to externalities to one built around an asset that is decentralized, resilient, and aligned with the trends of a digital-first global economy." Well said, sir. Anyway, since becoming the so-called MicroStrategy of Asia, Metaplanet has sold off all of its properties, except for that aforementioned hotel, and used the proceeds to stack sats. In 2024, the company purchased 1,142 BTC. Each purchase was accompanied by a press release, and Gerevich became a regular on the Bitcoin conference circuit, including the Bitcoin 2024 conference in Nashville. In February this year, Metaplanet raised almost $26 million for BTC purchases by issuing zero-interest unsecured bonds. And in January of this year, it announced its 2025-2026 plan, outlining plans to hold 10,000 BTC by the end of this year and 21,000 BTC by the end of 2026. Metaplanet started accumulating BTC in April 2024 and has been frequently scooping up more on a regular basis, sometimes multiple times in a week. So this brings Metaplanet's total stash to 3,200 BTC at the time of shooting. Meanwhile, Metaplanet's stock, which for some reason is called 3350, has been going parabolic since October 2024, having soared by an impressive 1,960% over the last year. Notably, Metaplanet stock has also gained traction because Japanese tax laws discourage direct crypto investment. That's simply because crypto is taxed at ordinary income rates, which can be as high as 55%. However, capital gains from Metaplanet stock are taxed at just 20%. Moving on, and the fourth company adding Bitcoin to its balance sheet is Semler Scientific. Semler is a healthcare company that manufactures medical products. It has a focus on diagnosing chronic diseases, particularly when it comes to heart problems. In fact, its flagship product, QuantaFlow, can measure the heart's blood flow and provide a near-instant diagnosis, even if the patient is asymptomatic. Credit where it's due, that's pretty damn impressive. But back to Bitcoin. Now, what's interesting is that in May 2024, Semler ventured into crypto when it announced its Bitcoin Treasury strategy. Semler's chairman, Eric Semler, explained that the move underscores the company's belief in Bitcoin as a hedge against inflation and as a safe haven during global instability. Eric also said that Semler believes in Bitcoin's potential to generate massive returns as it gains institutional adoption, and highlighted the SEC's approval of spot Bitcoin ETFs as a turning point. Eric also said that after studying various alternatives, Semler's board and senior management team decided that BTC would be the best use of their excess cash. Semler has announced plans to purchase BTC by using excess cash from its operations, as well as cash proceeds from sales made with their ATM program. Notably, Semler is also exploring other financing opportunities, although it's not clear how much BTC the company plans to hold in total. Since announcing its Bitcoin Treasury strategy in May last year, the firm has made several large BTC buys, with purchases seriously ramping up from November last year. For perspective, Semler scooped up 1,012 BTC between May and November last year, and then picked up another 1,072 BTC in the final 2 months of 2024. In 2025 so far, Semler has made another 2 purchases of BTC, one in January where it scooped up an additional 237, and another in February where it bought an impressive 871 BTC, the company's largest purchase by dollar value. At the time of shooting, Semler's total holdings are 3,192 BTC. Now, these unexpected moves into crypto have been incredibly bullish for Semler's stock price. When it first purchased BTC last May, its SMLR stock rallied by an impressive 84%. More recently, Semler's stock rallied by 40% following its January purchase and had a modest pump of 4% after it picked up more BTC in February. Well, better than nothing, I suppose. Okay, the fifth company adding Bitcoin to its balance sheet is Cango Inc., a leading car company and financial services provider in China. Cango focuses on connecting car buyers, dealers, financial institutions, and other industry participants, and also recently launched its very own Bitcoin mining business. And in a move reminiscent of MicroStrategy, it's also started accumulating BTC, despite its business model having nothing to do with crypto. According to Cango's CEO, Zhuoyuan Lin, quote, "While we continue to develop our traditional automotive business, we also capitalized on the growing opportunities in the cryptocurrency sector and strategically expanded into Bitcoin mining." Data from Bitcoin Treasury suggests that Cango's mining business kickstarted in November last year, when the company added 363 BTC to its treasury. Since then, Cango has been adding BTC to its reserves each month. And what's crazy is that despite Cango being a newcomer to Bitcoin mining, the company instantly became one of the biggest players in the game. That's because the company started its mining endeavor by spending a whopping $400 million on mining equipment, allowing it to gain 50 exahashes per second's worth of mining power. Now, for context, 1 exahash is equivalent to 1 quintillion cryptographic hashes, which are the guesses that miners throw at the Bitcoin blockchain in order to solve the block's complicated puzzle and earn a block reward. Having 50 exahashes of mining power puts Cango on a par with Mara, which currently has 54 exahashes of mining power. This means that Cango's BTC stash will likely balloon in a big way, and it'll be interesting to see just how quickly it builds its Bitcoin treasury. So far, Cango has managed to accumulate a total of 2,474 BTC, and the company hasn't sold any mined BTC to cover operational costs. Cango's recent move into crypto has also caused its stock price to explode. In November, when Cango made its first acquisition of BTC, its stock flew by an impressive 150% on the news. The company's stock rallied by another 18% when it accumulated BTC in February. But this rally was dwarfed in March when it rallied by around 54%. Cango then accumulated more BTC at the end of March. Now, all this is just the tip of the iceberg when it comes to publicly traded companies accumulating Bitcoin. In fact, at least 80 public companies now hold BTC in their reserves, and some analysts have predicted that 1 in 4 S&P 500 firms will hold Bitcoin on its balance sheet by 2030. A few other examples of companies recently adding BTC to their reserves include Hut 8, a Bitcoin mining company, KULR Technology, which specializes in sustainable energy and thermal management solutions, and biopharmaceutical company Quantum Biopharma. On top of this, a handful of companies have announced plans to buy BTC in the near future. These include Hoth Therapeutics, another biopharmaceutical company, Jiva Technologies, a plant-based e-commerce firm, and real estate firm Fathom Holdings. Clearly then, this trend is likely to continue, and this begs the question of what this means for the stocks of these companies and BTC's price. Well, in case it wasn't obvious, the company's stocks will likely benefit massively from having Bitcoin as a reserve asset, assuming that BTC's price continues to climb in the long run. The caveat is that if BTC's price falls, this could exaggerate losses. That's because literally every public company we've mentioned has a much lower market cap than BTC. And yes, this explains why GameStop stock tanked on the news. It was most likely the market conditions and the insane volatility of GME's stock. Recall that even Strategy's MSTR is hypersensitive to BTC's price action, and that's because Strategy has a market cap of $73 billion at the time of shooting, much less than BTC's $1.6 trillion market cap. Naturally, the lower the company's market cap is, the more susceptible it is to volatility. However, this goes both ways. If BTC pumps, then the stocks for these companies will rally like crazy. Well, assuming that other market conditions don't create any additional obstacles, that is. As for BTC's price, meanwhile, you don't have to be a genius to realize that this creates serious demand for Bitcoin. It goes without saying that as more companies accumulate BTC, this will drive up its price. The caveat, though, is that this also restricts BTC's liquid supply, which was already a concern with Strategy's BTC hoarding. Essentially, as more BTC is taken off the market and stored in treasuries, the liquid BTC remaining on the market becomes more susceptible to price movements, making BTC much more volatile as a result. That said, though, there's no denying that this is incredibly bullish for Bitcoin's adoption, which of course could attract yet more institutional investors. And if you want to see what areas institutions have got their BDI on, then you can check out our recent report summary over here, which reveals exactly that. Okay, if you enjoyed this video, smash those like and subscribe buttons to show it some love. And if you want to see our top crypto stocks, then check out the video right over here. And if you want to see our latest MicroStrategy update, you can check out the video right over here. Okay, thank you for watching, and I'll see you next time. This is Guy, signing off.